us started here and just let them in as they come. So thanks for all coming. Today we'll be having a presentation from Rockstone Research and Stephan Bogner. Stephan is a mining and commodity analyst with Rockstone Research, which is a research house specialized in analysis of capital markets and publicly listed companies. So Stephan, I'll hand it all to you. Now I'm going to mute everybody here, but like I said, if you have any questions, just go ahead and ask after the individual company presentations, or you can also message in the chat box and we'll be sure to get to you. All right, Stephan, take it away. Oh, sorry, Stephan, you are just muted if you want to just.
Okay, yeah, thanks for setting this up, Colton, and the entire Zimtu team. Hello, everybody. Good morning, Vancouver. Good afternoon, Toronto, and guten Abend nach Europa. So let's get started. Let's not waste any time. The markets are open. We want to keep everything to the point here and stay casual. So I have some fantastic guests here for this show today, executives from exploration companies, most of which I'm actually a shareholder of. So obviously I'm biased. However, I really think that these companies are on the verge of creating shareholder value, especially if and when the gold price gets moving again. And today we have Sophie Caesar from Ximen Mining, we have David Gower from Emerita Resources, Pat Power and James Ferreira from Winn Resources, Dave McMillan and Chris Nash from IMC International Mining, and Scott Rose from Core Assets. So yeah, before we get talking to these executives, I will briefly take a look at the gold market and present you some reasons why are we actually doing this show here today. And it's because I believe that the correction in the gold price and on also other commodities, that since gold corrected in August, I believe it's at the very end right now, and that a new price upswing is ahead of us. And yeah, this could be a really great opportunity for investors. And I'm going to show you my presentation here right now. So let's get started. Yeah, I will show you some charts which I found. I really like Twitter for that, as I'm following more than 3,000 people and companies there. So check out those charts I have here and those people I mentioned here, as I think they are among the best analysts and they do really good. Here we can see the gold price since 2018, and actually it has been really a roller coaster since over the last weeks and months. And we can see that the gold uptrend, it started in mid 2018, and actually since then we are in a really nice upward trend. Of course, Corona crisis in March here, it also had an impact, but I believe that the coronavirus is not really the main driver of this gold bull. And especially if this pandemic gets resolved with vaccines or whatever, I don't think this gold bull market is going to end. We can see that the gold price spiked very dramatically in mid this year, and after that the gold price corrected, and it took since August like a couple of months now already, and we just recently we hit the 200-day daily moving average, which is a very strong support, and I believe we from this point on we will go higher. Here we can see the gold price in gold in the 70s. When it was rising for about 5 years, and then it also consolidated for a couple of years before it then really took off in a final leg. And if we then now superimpose the gold price since the 1999, we can see a similar pattern, although the time frame is a bit longer than the 10 years in the 70s. So here we see in black the gold price, it also went up just like in the 70s to this point here, and then a consolidation, a correction started, which took since 2011, it took now almost 10 years, and since 2018 we are actually in an upswing again. And as you can see here in the 70s, we also had a big correction, and this was because we were going over this green resistance. This was the high of the mid 70s. So once we broke over this high in the 70s, there was a pullback. And this is what typically happens to prices. Once you break above a resistance, there's a breakout, and after that there's a correction and a pullback. just to confirm this resistance as new support. And we have been seeing the same here with the gold price in black. Actually, it's a bit older, this chart. So we have been seeing that we have a new all-time high. We went over it, and then that there was a correction. So I think now with this support level, we are in the final legs of a gold bull market. And I think right now it's actually the best time to be invested. Here's another picture of the US dollar gold price, where you can see the 2011-2012 all-time high of about 1923. And this resistance here, the green line, we broke out over this resistance here in 2020. And what happened after that is it was a correction, pretty harsh correction, but it's all healthy because we are just confirming this resistance as new support. And once it has been confirmed as support, the new upward trend actually starts. And we can see it down here. Here's the mining index of the Hui, and it's already going up. And the US dollar, it's also very important to always follow the US dollar because the gold price, it follows the fluctuations of the US dollar. Now here we can see the log scale of the gold price in the 70s, when in the mid 70s it rose very sharply to this level here. And the same dimension is happening since 2000 until 2011. And as you can see in the 70s, this resistance here, after we hit this resistance here, there was a sideways consolidation and a correction going on until this point here, when this resistance was broken and a breakout took place, and thereafter a correction, a pullback happened. And after this pullback, it was confirming this former resistance, then an upward trend started. And now we are seeing the same again. After we hit this resistance here, we had in 2011, we had a correction going on. And now we have hit the all-time high. We went over it. We have been confirming this former resistance. And now the way is open for a new bull market. And according to this, if we take the same dimension here as in the 70s and in 2000s, we are likely going towards 10,000 US dollars. And that's like the best time to be invested in mining stocks. And also a gold price and other currencies. Here we see the top 20 currency ranked by GDP. We are a bit further. The US dollar gold price is actually lacking behind other currencies, the euro, the Canadian gold price, Australian gold price. They are much further advanced, and we are much higher than the previous high in the 2011 and 20. But also here you can see that we just hit a very strong support, and that from this support level, the gold price could go higher. Yeah, if we look at the last gold bull market from 2000 to 2011, 12, we also had a high number of corrections taking place with 20%, 28%. So in August, we hit 2,089 US dollars, and then we saw a correction to 1760 about, so that's minus 15%. And so, yeah, it's a normal correction that's happening. It's nothing unusual, it's healthy, and that's what we actually want. We want a high volatility in the gold price because this shows us that the market is alive, and we want high volatility. Also, it can be brutal if you are not really long-term oriented with your investments, but I think that these corrections, they also offer great opportunities. So here we can see the US dollar. The US dollar is very important to follow over the next years, of course, especially for the US dollar gold price. We can see that the support level of the US dollar index here at 92 points, it has been broken to the downside. And this is really a negative sign for the US dollar, and it should go lower. Here we can see a long-term chart of the US dollar since the 80s. And here we can also see that the next really bigger support level is in the 85 region. And we can see that asset managers worldwide, they are shorting the gold and the US dollar index and the US dollar, and never before since 2011 the shorts were so high as right now. So I'm also betting that the US dollar will go down over the next months and weeks, because all the liquidity that is being pumped into all kinds of markets, it's actually not good for the US dollar. And also we can see a lot of negative yielding debts and bonds, and this is also driving the gold price, that people are looking for alternatives, and with negative interest rates, people are really looking for ways to protect themselves. Here we can see the debt as a percentage of GDP since the 1940s, and that we are actually now surpassing the World War II levels. And this is really dramatic what's happening here, because I don't really see there a point of that debt going back again. In the 70s, we also had debt going up, and we had inflation. But the good thing in the 70s was that the debts were not so high as they are right now. And back then, when we had the inflation, you could combat and fight the inflation with higher interest rates. And that's what Paul Volcker did in the 1970s, end of the 70s, in the 80s. He raised the interest rates to almost 15%, and that killed the inflation. And then the bull market in gold was also over. The problem today is we have so much debt that they cannot really raise the interest rates. So once we are really going to see inflation picking up, there's no way to stop it with higher interest rates. So that's really going to fuel the gold market, because once inflation is really coming up, it's going to be problematic to stop it. Here we can see that the money growth, the M1, M2, and M3, and how they have been increasing over the last weeks and months, and over the years, of course, but that since the Corona crisis in early 2020, they have added so much money, and actually since September 2019, over $9 trillion, and they're saying that 22% of all US dollars were created in 2020. Here in red, we can see the M1 money growth and the gold price here in gold, and that actually the gold price is following the M1 money printing, and that the gold price actually once in the beginning of a bull market, it really is very close to the M1 money amount. And then at the later stage of the bull market, the gold price really takes off and trades much higher than the M1. And we can see that here right now the gold price is very close again, and that we are probably in the beginning of a new bull market, and the gold price should really shoot up much higher. And yeah, it's unprecedented. We have never seen anything like this before. You can see here the M1, how much trillions of dollars have been created and how fast it is going on. And this really shows to me that we are at the very end of this fiat experiment of money printing. It's really going exponential right now. And even the central banks, they want higher inflation, and I see higher inflation coming up. Everybody wants it. Inflation is needed, and central banks are doing everything they can to do it. Of course, we have a deflation right now, deflationary pressures. However, you probably know that that deflation is the prerequisite of inflation. So before really a great inflation kicks in, there must be deflationary pressures before that. And that's what we are seeing right now. We are seeing deflationary pressures everywhere. The US dollar is still pretty strong, but over the long term, I see inflation picking up. And here we can see the currency creation compared to gold and silver. Here we see 120 billion US dollar being printed every month, and in the US, and gold monthly production worldwide is only 13.6 billion. So they are printing 10 times as much money as gold is being mined and being put into this market. And this really shows how tiny the gold market is. And yeah, Ludwig van Mises, he once said that there's no means of avoiding the final collapse of a boom brought by credit expansion. and the alternative is either you abandon the credit expansion, or you wait for the final catastrophe to happen. And yeah, he's right that there's no means of avoiding this final collapse of currencies, debasements, but there is a means of protecting yourself. And I believe that physical precious metals and of course gold mining stocks, they are the way to protect yourself. And when we look at the wealth distribution in the US alone, we can see that about 69 trillion US dollars is in financial wealth. That's paper money wealth, that's stock markets, paper, and all these papers, of course, they can depreciate very low because they don't have intrinsic value like gold and silver. And that real wealth, that's businesses and real estate, there's $36 trillion. And that actually only less than $1 trillion in the US is actually in gold and silver. And just imagine if just 1 trillion of all these hundreds trillion in the US comes into the gold market, and the gold market really cannot absorb this kind of money which is flowing around worldwide. And that's really the beauty of the gold market, is that it's really so tiny. And in next years, we're going to see that people are going to protect their money, especially during inflation. So all these monetary values, which are in financials and paper money, but also in real estate, they are trying to protect themselves. And if one of those $356 trillion worldwide is flowing into the gold market, the gold price is really going to explode. Now let's look at the non-financial businesses, like companies on the stock market in the US and UK. We can see that the debts also, they have increased very sharply over the last years, but that the profits of the companies, they have not really picked up. And that's really a bad sign, that when you create or take all those debts, that you're not really turning this money into profits. And that's not a really healthy sign for the stock markets, in my opinion. And here you can see the commodities as a ratio to the equities, that we are right now at a very low point, and that commodities are very cheap compared to stock market valuations, and that this is like a great buying opportunity for commodities, and that over the next years and decades, I believe we are really going higher. Here we can see commodities since the end of the 1870s, and that actually in 1930s the commodity prices started to rise, and since the 1930s the commodity prices are in an upswing. Typically for the prices, they rise very sharply over maybe 10 years, 20 years, and then they do a sideways consolidation, and this is what has been happening over the last decades. And right now we are down here, and it's a great support level. And I think that over the next decade, we are going to see much higher commodity prices. Below here, you can see in yellow the inflation rate, and you can see also that the uppicking inflation, that's what commodities are performing the best during higher inflation. And right now inflation is also at the bottom. So I think that from here on, inflation will pick up and commodities will also start rising. Here we can see an interesting chart from a guy from Twitter, Grady. It's a couple months old, actually, before the bull market started. It was here in, I think it was mid or early 2020s. So right now we are here at this level here at 2000 about. But this really shows that since the 70s in a logarithmic scale, we are really here in a new upward trend, and this should take the gold prices really higher. And he also sees that over until 2030s, 2040, gold price will be rather in the area of $10,000. Now, here you, in the past and still today, many people and analysts, they are talking about the gold price bubble of the 70s and even in the 20s, in the 2000s. And in the 70s, gold price rose 20-fold to an intraday high of a bit more than 850. But here you can see the annual average prices of oil in black and gold in orange. So it doesn't really include the daily peaks and lows, only the long-term annual average price. So in the 70s, the oil price, it rose from $1.80 per barrel to $36. So what this chart shows us that if the oil price goes up, so does the production cost of gold, because mining is primarily very energy intensive and oil still is the major cost driver. So if the production costs go up, so does the gold price. So the first gold bull market in the 70s, it was not a bubble. It was driven by higher oil prices or oil price inflation. And in the 80s and 90s, then the oil price corrected, and so did the gold price. And then in 2000, oil was about $14 a barrel. And then within 10, 12 years, it shot up to about 110, where it stayed for almost about 3 years. And as you can see now here is that gold followed the higher oil prices because if the price to produce gold goes up, so does the market price. So both bull markets we saw in gold in the 70s and then 2000s, they were not really bubbles, but they were driven by higher oil price. And then a couple of years ago, the oil price corrected sharply all the way to this day, and so did gold. But now, this third gold bull market we are currently in, you can see a disconnect from oil, and this is really very powerful because gold price right now is not driven by higher production costs and oil price inflation, but by a massive increase of investment demand. And gold is now, for the first time actually ever, is behaving not like a commodity as it did in the last two bull markets, but as a currency and a store of value or as an investment. And this is the most strongest fundamentals for a gold bull market. And especially as Steve Santangelo, he also said from SRS Rocco report that he said, I don't see this gold bull market ending. And certainly the gold price will continue to fluctuate and we will see sharp corrections like we have seen in the past couple of months. And but the demand will only get stronger as the world will begin to transition from building wealth to a new paradigm of protecting wealth with precious metals. So here we can see the full production costs of the two largest gold producers in the world, that's Barrick and Newmont in orange, and the gold price in green. And you see that between 2000 and 2008, the gold price was almost the same as the production costs. And then in 2008, the global financial crisis started and people were getting really worried. So we saw the gold price increase a bit higher than the production costs, especially in 2011 and 2012. So during this time, gold was performing more like a monetary metal and not as a commodity as it did in the years before. So then we saw the correction in gold in 2012, but it was not that the bubble burst or but it was because that the gold price went back to the production costs. And this was a very strong support level. And that's why also the gold price didn't really go much below these production costs, because that's really a support level. So now we are already seeing the gold price going much higher than the production costs, which is a very healthy sign for a strong new bull market in gold, because now gold is finally acting as a monetary metal and not as a commodity as in the past. And this third bull market we are currently in, and I believe it will be the strongest ever, as I believe just because of these fundamentals that the price is driven by investment demand, which was not really the case during the last two bull markets. And yeah, this now will be very good for gold exploration and mining companies, especially also for investors, because these companies now can make much more money mining gold, but also the incentives to find new gold resources, it's much bigger right now. So more money will flow into the exploration space. So here we can see actually on the top, you can see the gold discoveries over the last decades in yellow here, in millions of ounces. And you can see that we have a a downtrend. We are not really discovering more gold ounces. And this is quite fascinating because here you can see in red on the right the gold price, and you know in the 2000s all the way until 2011 and 2012 we had much higher gold prices. But this despite of increased exploration spendings and budgets, which you can see down here in red. When the gold price was picking up, that's normal that the companies, the mining companies, but also the exploration companies, they increase the exploration budgets because the gold price is higher, the incentives are there. But despite these much increased exploration budgets, we did not find any more or much gold, and this is really dramatic, and why people are talking about peak gold right now. We can see here, but only until 2013. And I also believe that we have seen peak gold already over the last years. Over the next years, we will see the gold production globally going down. And yeah, I mean, this is the perfect scenario for exploration companies. I mean, of course, it's more difficult to find, as we can see here on these charts. It's difficult to find gold, but if you find gold, and if there's a small company finding gold and building these resources, then you're really against this trend, and this is really valuable. And that's why I think exploration over the next years, it will be the key sector where people can make money if those companies really can build on resources, discover gold resources, and yeah, once they have discovered it, the big mining companies, they are not really into exploration business. That's not what they do. They do mining, they do the production. They have cut all the exploration spendings over the last year just because they have seen that it doesn't really make sense to spend money because they're not finding anything. So let's put that risk to the exploration companies. And once they have found something, we can see that these companies will they will be picked up by the seniors. They will be acquired. I think the M&A and acquisitions in the mining sector will increase over the next months and years, and that's the perfect scenario for explorers. So that was my presentation here right now. Let's get over to the next companies. I think you still can see my screen. First off, we're going to talk to Ximen Mining. We have Sophie Caesar here with us. She's the IR manager for Ximen. She's actually right now she's in Montreal. And Sophie, can you tell us a little bit about your background? I know that you have been working for Maya Gold and Silver in the past, which we can see here. I believe the company got taken over very recently in 2020 at about $2. So tell us a bit about your background, Sophie, and why you changed over to Ximen, and why do you see Ximen as a good company right now?
Hi, Stephan. Thank you. I started working out in investor relations in mining probably about 6 years ago, and I worked for a couple of Montreal publicly traded companies. I've helped 2 of those companies transition from the TSXV onto the TSX, Maya being one of them. So I was working at Maya exactly, I guess maybe about 2.5 years ago. And so we transitioned from being an exploration company to a commercial production company while I was there. As well, we did the graduation from the TSXV to the TSX. And what happened recently is there was a change in management at Maya, and seeing as their focus was basically in Northern Africa and no longer Mexico, they changed their name from Maya to Aya. And then I guess it was a little over a year ago when that transition was going on, Christopher Anderson, CEO of Ximen, approached me, and seeing that Ximen is in the same position that Maya was in, in wanting to bring the Kenville to production. That opportunity to be part of a project like that was very exciting to me, which is why I came on board at that time.
Great. Can you tell us a bit about the Kenville mine project? I know that this is the focus right now. You're putting this high-grade, past-producing underground mine back into production. It's near Nelson in southern BC. And yeah, I really love this project because it's high-grade gold, and they already have existing mining shafts and levels, and you have been restoring the mine portal here for the 257 level over the last couple of months, and we saw the progress. Great pictures we saw in your news releases, how work is really progressing. And now tell us, what are the next steps? What can we expect over the next weeks, and what is missing to get into production now?
Well, I think what's important to note is that all the work that we have done, so all the public consultations have been done. They've all gone extremely well. All the environmental work has been completed. So that's done. Everyone's 100%, aware of what we're doing in the area. And there's actually a lot of support from the community. If I could tell you, I must get at least once a day someone asking, when we'll be hiring, and we've made it very clear that we're going to be having high-paying jobs in the area. Our infrastructure is phenomenal. We're about 15 minutes outside of Nelson, very easy to get to. So we've done all of that. We've moved all the mining equipment on site. Everything's paid for. We're ready to go. So when we're looking at next steps, we've been very clear about it in our press releases. We're waiting for the mining permits. That's the next step. We're ready to go. Everybody's on the ground. Obviously, we were delayed with COVID. Everything's either shut down at one point or, moved to snail's pace, and it's taking a little while to get back started. But that's what we're waiting for, is we're waiting for those permits. And then we're going to start the portal and development for the 1,200 meter decline for the 10,000 ton bulk sample.
Yeah, absolutely. So the 257 level, which you have been refurbishing over the last months, is actually you're going to try to access a historic resource. I believe there. How many ounces are there? Like, I think historically, I forgot the number.
So we're not actually going after the historical resource. What we're doing is we've done quite extensive drilling, has been done, I think since 2009, and we're targeting what we believe is the extension of the vein of the previous mine.
Okay. So once you have the permits from the authorities, you can start straight mining, right?
Yes, exactly. So it's going to be underground mining. We're going to be going in and slowly drilling to what we believe is the sweet spot. And yeah, then we'll be producing gold at that point. So probably after we get the permits, we're probably looking at, after drilling commences, the extraction of the bulk samples somewhere, around the 9-month mark conservatively.
All right, great. Okay, I invite everybody to ask some questions. We also have Andreas here, he's a German consultant who works with Ximen. He lives in Vancouver. He's German. And yeah, if you want to ask questions in German, Andreas really can answer those as well. So go ahead and ask any questions that you might have.
Yes, one thing I would like to add, the 9 months from the time frame when we get the permit is for commercial production. Then the commercial production will start. In the meantime, in this period, the first 9 months, the bulk sample from roughly, as Chris said, roughly 5,000 ounces will be extracted. Also 10,000 tons is half an ounce a ton.
Yeah, I know, it's like really high grade. It's almost half an ounce historically in what we've seen in the historic resource. There will be confirming, of course, these with new drillings, but it's high grade, narrow veins, and they can really follow those veins with very fast underground mining techniques, and just, you know, the dilution with barren rock is going to be low, so everything they're going to get out there, it's pure vein material. So yeah, I'm really looking forward to this company becoming a producer over probably next year. So yeah, follow Ximen Mining. TSXV symbol is XIM. They have 71 million shares outstanding right now, and they're trading at 30 cents. Market cap is 21 million. So here you can see the chart. It has been coming off now, and I think it's a great opportunity. Okay, if there are not any more questions, we would go over to Emerita. David Gower, are you here?
Sorry,
Anybody?
I was on mute. Yes. Hi, Stephan.
Hi, Dave. How are you?
Very good. Thank you. I sent a few slides in. Oh, there they are. So we just skip ahead a couple. I think one is just forward-looking statements. Okay, let's just forget this. This is the full deck. Sorry, I must have sent you the wrong thing.
No, I didn't get it. That's your presentation that's on your website right now.
Yeah, okay. Yeah, I sent you just a couple of slides. So basically, if you just scroll ahead a little bit further, then
you can also share your screen if you can.
Okay, let's start with this slide. That's the next one up.
This one?
No, yeah, that one. Yes, we'll start with this. Okay, so the Iberian Belt West project, for those of you who've been following the recent presentations, we were awarded that in the summer, and we were just in the process of getting the drilling permit, which we've been waiting patiently, as have our shareholders, for a much longer time than we expected. As with everything, I guess we're in a COVID world. But I have been informed as of this morning that a letter from the Environment Department in Huelva Province to the Mines Department was sent, and so we should get that imminently. We're going to be pushed up against Christmas, so I would say very likely it'll be January we will start drilling. But just to remind people, the first drilling that we'll be doing will be on this Infanta deposit. It's only been drilled to shallow depths with very high grades, 1.5 to 4% copper, zinc grades of 10 to plus 20%, and silver grades that are between 100 and 300 grams per ton. Very shallow. It's only been drilled to about 110 meters to date. The program that we laid out, if you look at the last press release, should extend the strike length of this from about 600 meters to more than 1,200, and we'll extend the down dip targeting of this to about 300 meters depth. If you go to the next one, Stephan, keep going. I won't talk more about that. That's really the update. Well, maybe stop here. You could get a sense for what we're drilling at Infanta. 5.7 meters with 181 grams of silver, 1.3 copper, almost 12 zinc in the upper hole, 5.3 meters of 240 grams per ton silver, almost 3% copper and 24% zinc in the deeper hole. So it's a very high grade deposit at surface. We already have about 40 odd holes into this from the historical work. We will update that and expand it into a 43-101 resource in the first part of next year. Okay, the next one, Stephan. And the other deposit on the property is the Romanero deposit, which is the larger of the two. And we'll also be drilling on this first quarter of next year, we expect. If you just keep going to the next slide, perhaps. Again, we have about 50 drill holes into this deposit as well. It was drilled by RTZ and Asturiana Zinc before that. So it's a 34 million ton deposit. It comes to surface. You can kind of see that one line where along the south edge of the drilling there is where the old trenches were, where it comes to surface and dips off to the north. We're focused on this 11 million tons of high grade, which is within that 34 million tons. And then if you just look at the table again, this is a very gold-rich system. You can look at see very good gold values for this type of deposit within the high-grade zone. And if you look at
that's almost 1 million ounces of gold, or like 900,000 ounces with 34 million tons historically. That's quite a number.
That is, and that doesn't include that grade is understated because the early drilling was done by Asturiana de Zinc. So you see those C named holes, C1, C2, C4. Asturiana didn't even assay for gold. So the average gold grade that's been calculated this basically makes a 0 when there's no value. So we will expect to see tonnage increasing on this deposit without even drilling a hole, just by assaying for gold when we go through some of those things. Similarly, when Rio Tinto did their work at that time, gold was just a 4-letter word. It was in one of the downturns that Stephan mentioned too. And when they did their composites, they just added lead plus zinc. They didn't actually use gold as part of the calculation. So very straightforward, geologically nice thick deposit. The deepest hole is about 350 meters. The deposit's still 20 meters thick at that depth, and should be very good.
Yeah, and actually you didn't really acquire this project, but you won a tender, a public tender, and that's like really special because you didn't spend any money on it. You haven't been working on it in the last years. It's a large deposit, as you can see here, 34 million tons, and it has been extensively drilled in the past. So the government, the local governments, they have been looking for mining companies to take it over and take it to the next level. So I believe this is a really great proposition of how you actually acquired this project. Can you tell us a little bit about that, and then maybe go over to the Arsenal Collar?
Sure. It was a public tender process, so there's no cash payment to acquire it. It's basically to do the work to develop it. The tender was disputed for a number of years, so we've actually been through a more than a 5-year process to acquire the property that involved a legal battle, but it ultimately went to the Supreme Court of Spain. We're in the Pyrite Belt in southern Spain, and the Supreme Court ruled in our favor earlier this year, and there's no further appeals. The government has subsequently awarded it to us. We're in the permitting process for the drilling, which we expect should be imminent. And we'll be drilling very high-grade holes early next year.
And you already have the funds. I saw that you were doing a private placement. You increased it very sharply from $2.5 million to $4.5 million. Why did you increase it? Was the demand so high for this financing?
Yeah, we were fully subscribed at 4.5, Stephan, including the overage. And in fact had to cut people back at that level. So we're in very good shape financially to really push hard on this project, and also to initiate a more aggressive approach on the next one, which we can talk about now.
Sure, let's do that.
So Asno Coir is the other major project in southern Spain that we've been working on. This one has been involved in a criminal case, but it's also concluding. And if you looked at our recent press release, you see that it's been through 2 rounds of appeal, and we've had 5 Superior Court judges in both cases unanimously rule in our favor. This was a past producer, so it is drilled off as a reserve already, high grade, and this tender was put out and approved by all levels of government in Spain, and all parties unanimously voted in favor of doing it. Again, it's an area with very high unemployment and very, very strong support. The community actually lobbied to have this put out and put back into production. So we expect early next year that this should be resolved, and all indications are at this point it will be in our favor. If you just scroll down perhaps to this slide. So this was operated as a large open pit. It's a 70 million ton deposit. Again, what we would be looking at is actually developing an underground mine, much higher grade, about 10% combined lead zinc, with 2 to 3 ounces of silver. Essentially ramping from the existing pit. Because it's drilled as a open pit reserve, it was only drilled to about 350 meters depth. The deepest holes that you see, and we're only talking about the central lens here on this map. The deepest holes are still 40 meters thick of massive sulfides. The deposit that looks like it's in the hanging wall is the original Asno-Coir deposit. It's actually more copper rich, probably almost a 90 million ton deposit. We haven't even looked at that. It's quite a bit lower grade, but given where we think copper is going, that will also become important. The deposit to the left doesn't even have a name. It's just some drill holes, very good grade, very similar to what we see at the Los Frailes deposit, which is the middle one. All of these could be accessed from that underground access. And if you just look at the historical resource below, so that 20 million tons there is Boliden's number, who were the operator. That's pit constrained. When we take the pit constraint off, we come up with a number closer to about 28 million tons. And of course, it's still wide open. So that's really, this is a game-changing type deposit that's already drilled as a reserve and will go straight to feasibility, essentially. A few other things, if you were on the last call that we did, there were some questions about our ownership on our northern properties. I'll just update people and say that the Plaza Norte joint venture, which someone had indicated we had lost. In fact, our permits were renewed at that project as they were at Sierra Alta for 3 more years. And we've just, we are in the process of closing the financing that Stephan mentioned earlier. So great shape. The stock has come off a little bit because of the time it's taking to get the permitting done. But once the permits are in place, and that should be any day now, we'll be permitted for the entire duration of the license at Iberia Belt West, which is about 3 years. So we don't have to go through this process every time we drill. Just very exciting time after a very long grind.
Absolutely. No, I'm following your company. I'm a shareholder myself, and I really love the prospects. You have a market cap right now of 15 million. It's trading at 16 cents, 85 million shares out. So I think with even only the Paymogo, the zinc gold project there, it's great value. It's a large deposit, and if you get this one here as well, next year, I think this will also be another game changer for the company. So thanks very much, David Gower, for being here, and we will be following your company.
Thank you.
Price. Okay, next we have Llewelyn. We have Pat Power, I believe, and anybody else from Llewelyn? I think it's James Ferreira.
Hey, Stephan.
Hey, James, how are you?
I'm very good, thank you. Yeah, thanks for having me on.
Sure.
Yeah, sorry, I was horsing around with my mic there.
Yeah, so Pat is probably busy. I mean, Buddy is probably
also. So Arctic has their AGM this morning, and he's doing the AGM right now. So
all right. Okay, cool. No, you know a lot about this project that you recently acquired. It's in Manitoba, and I think you are one of the persons who knows most of it. Please tell us about your background and why you like this property so much.
Yeah, sure. So I'm the property vendor's son, and well, so we just acquired the Cloud project in Manitoba on the Flin Flon Gold Belt. I'm personally love gold right now because the upcoming stimulus package the States is going to announce. And so I asked my dad for his best property. And to give you some background information about him, his last deal he worked on in Manitoba was 10 years ago at Sand Gold Corp. And the stock hit $5 on 350 million shares. And he was the man who found 2 of the gold mines out there, the 007 and the Hinge. So back to the cloud property. He picked this property up 22 years ago when gold was trading around like $400-800, and he's kept it in good standing ever since. Things that drew us to this property, we have a lot of high-grade gold outcropping, and we have some historical trenches as well, with a lot of gold in there as well. On the slide that Stephan's showing here, the yellow stars are visible gold, and the blue lines there are proposed drill holes. So basically, the game plan is put the drill hole right under the under the visible gold trenches there. So that's what Buddy's trying to show. Some of the samples here. So there's one grab sample going as high as 122 grams, and so yeah, that's looking really, really good here. The two anomalies that he's planning on drilling, we're looking at the outcrop here. We can move lower here. The IP, and okay, so right here, what this one's trying to show is that there's a fault going right through the property, and a lot of the rocks right here, they have a lot of alteration leading up to these two anomalies. So we can skip over to the next slide. So the IP survey here, just to the left of the outcrop. Yep. So we've updated some of the geophysics. It has not been drilled yet. There's some historical drilling around it. The IP is roughly around 500 meters, so it's a pretty good size anomaly. These things tend to hold like chalcopyrite and gold in them. So that's what we're going to be drill testing for. And the next slide as well. You can scroll down one more. The resistivity anomaly. This has not been tested. The resistor is known to carry rocks such as quartz. So we're hoping between the two of them, there's going to be that we're going to get some gold on the upcoming drill program here. That one is 800 meters. So combine the two anomalies are 1,300 meters. So if we get something, it should be pretty big. We do not have a resource on this yet. We are drilling this for the first time. There's tons of historical drilling around it. For the company around was Esso, and they were looking for a lot of VMS conductors. So this time we're looking for gold, and there's lots of gold outcropping here, so we're pretty bullish on it. Recently, the venture has approved our deal just a couple of weeks ago. They were understaffed, and which is totally understandable in these COVID times. So we have been very active with news over the last couple of weeks. We have tripled our ground position. So our property is now 1,469 hectares, so like 14.7 square kilometers. We are fully permitted, ready to go. Our PGO is very connected there. He's one of my father's contacts as well. He went to the right people, is full permitted, ready to go for drilling. Stratus has updated the geophysics as well. And that was a company that Buddy's done a lot of work for and helped build. So we're very confident. Recently, as it was going on right now, we have contracted Rodden Drilling, which is the top company out of Manitoba for the drilling. And we've done a lot of business with them as well. They are on the ground setting up for a drill program right now. They were just setting up the water lines last night, so they'll be drilling any moment. We're intending to do about 10 holes and about 3,000 meters throughout the drill campaign. We will keep our shareholders up to date with news releases throughout the drill campaign progressing. So you'll be seeing it. You'll be seeing another news release here very shortly, potentially tomorrow morning.
And this drilling is already funded. You're not.
Oh, absolutely, yes. So we raised 2.75 million. That was a split between hard dollars and flow through. So we did 1.5 hard and we did 1.25 flow. The drilling costs up here are dirt cheap. With Rodder and drilling there, we got an all-in cost, everything, $130 a meter.
Well,
Yeah, dude, outstanding.
excellent.
Mm-hmm.
Okay, thanks so much, James. Follow Winn Resources. The TSXV symbol is LWR. They have 38 million shares outstanding right now, I believe. Is this after the financing or was it before?
This is all post-financing. There's 9.4 free trading right now.
All right, excellent.
So what you're seeing is that's including the financing numbers and that stock is going to be held until, I got to check the date on that. Yeah, you got the news release right there. So 12/2, so that would be January, February, March, April. So April 2nd.
Plenty of time. All right. It has a market cap of 9 million right now. So keep following it. I think with this drill program, which is coming up, they really have good chances.
Mm-hmm.
All right. Thanks, James.
Thank you, Stephan.
Next is IMC International Mining. We have Dave McMillan and Chris Nash. Welcome, Chris.
Yay.
Yeah, I've been following your company. I did one Rockstone Research report earlier this year. I really like your project. You're in BC, not really in the Golden Triangle, but it's another really interesting area. Can you tell us a bit about your project and what are you up to now, exploration-wise?
Sure. Am I able to share the screen?
Yeah, sure. You can try it now.
Share screen.
Yeah, now we can see it.
There, do you see that?
Yeah.
Perfect. Yeah, my name's Christopher Nass. I'm the project manager for the work program that's been going on for IMC. David can get into the corporate side of things, but I'll just kind of touch on the property. Just kind of my quick background. I'm a PGO. Been working around the world and started various companies, Yellowhead Mining, for example, founding director of that, and then founding director of Thane Minerals, which staked the Thane property, and then which was acquired by IMC earlier this year. I was retained to continue with the work program on it. So what we've got, the Thane property is approximately 20,000 hectares. It's located up in north central BC, 48 tenures. What's nice about this location of the property is that it is close to the infrastructure. Although there aren't roads that actually go deep into the property, they do go on the outskirts of the property. The main line that's just 12 kilometers off the side is the main line that goes up to Chemis with the power line right next door. What's nice about this property is its location in that we are in the Quesnel terrain. To the north, we have the Chemis. To the south, we have Mount Milligan. And so, we're in elephant country when it comes to porphyry copper. And that's the style of deposit that we're looking at, is a porphyry copper gold. In this, the property was, the government has taken an interest in this area in the last few years because it's been relatively underexplored. Even though we have the Chemis, the Toodoggone area far to the north, we're kind of in this no man's land of the Toodoggone in the north and Mount Milligan down to the south. And so the government came in and did some very detailed mapping, starting to try to bring in interest into the area. And that's what this map here is. We're basically intrusive rocks hosting this porphyry copper. What we have found to date on the property is kind of six areas of copper, gold, and silver mineralization, from a variety of styles, whether it be, say, in the north, the map showing where we can get up to 4,000 grams silver, down to the cathedral where we're getting almost an ounce of gold. Well, this is here is summarizing kind of the historical work. Now, what's important, I think, is that this property, it's a new discovery. It was staked. I staked it back in 2009, and based on government silt sampling, and expanded that land position, and then have gone in and done work on the property. So all the results that you're looking at are samples that have been collected by us in the last 10 years. And we've been moving this project along, slowly. Up until last year, it was just privately funded by myself and my partner. And then with IMC coming on board this current year, we've been able to put more significant funding in, and therefore more significant exploration work. As I just mentioned, it is a porphyry. The work we did back in 2017, we had all these exciting gold and copper numbers, and we wanted to put it all together. And so the mapping and the modeling that we've done suggests that it is a porphyry copper, and this is kind of an illustration of porphyry coppers that's being used. It's just, not to get too technical, but this is where we're kind of putting ourselves, the red circle here. The previous slide showed that there are several showings or areas of mineralization, and the type of deposits that we're looking at, again, without getting too technical, these alkalic porphyries, they're actually quite small compared to the more traditional calc-alkalic, where they're kilometers. They can be just a couple of kilometers in diameter, and so you can get these pods all over the place of multiple deposits within your property. So we do have a good land position, and to date we've found, like, probably at least 6 of these satellite deposits. Again, this is just a quick diagram showing that this system is a copper gold system. The moly, there's not a lot of molybdenum here. It's all plotting up in the gold and copper areas, which is nice because I'd rather have a gold kicker than a moly. So this past summer, as I said, with IMC getting involved, we were able to, we went back in and did a lot of geological modeling. There has been no drilling on this property. So this is a grassroots exploration program, taking it basically from a silt sample up to where we are today. And so we wanted to continue doing this petrographic work to find out, because we're down in the trees, we don't have a lot of outcrop. So we're modeling this to figure out where's the best place to drill. We also expanded doing IP, again, looking at depth. We've got all these surface expressions, and we want to see what we've got at depth, again, with soils and rocks, as well as geological mapping. So of these 6 areas, the most, the area that we've done the most work is what we call the cathedral area. And there are 4 principal areas, the Pinnacle Cathedral, Cathedral South, and Gully. And this is a map from last year's work. It's up on the website. And you can see the alteration, the rock sampling. Again, all these rock samples that you see in triangles are samples that we've collected. There was no sampling at all done here in the past. It's a brand new discovery, the cathedral. And the lines that you see here, this is the IP lines that we did last year, picking up chargeability anomalies. We're picking up 2 in the northern part, and we're picking up 1 down below in the south. And these line up. This year we did the soil sampling along the soil, these grid lines, but this line here is a contour soil sample we did, and you can see how the soil samples have kicked up on the edges of our IP anomaly. The gold values, the copper values are quite significant. In the Pinnacle area, the style of mineralization is sheeted quartz veins, where we're getting up to 20 grams, float samples 23, but these samples that you see, 20 grams, 8 grams, 4 grams, are all outcrop samples from the Pinnacle area. Cathedral, we get sheeted, but they're massive chalcopyrite veins coming through. That's where you're getting 13 and 12% copper. Again, what's nice about the Cathedral area is the significant gold values that we're getting. We get high copper, we get high gold, 6 grams, 3 grams. Even in the disseminated chalcopyrite copper values where we're getting 0.5%, we're still getting 0.4 grams gold, 1 gram gold. So we get significant gold with our copper mineralization. And this area is about 2 kilometers by 2 kilometers. So it's a significant area that has yet to be drilled. Again, this just gets into probably a little easier to read, just the gold values and the copper values. Again, there is silver credits here, as you can see, but we're focusing in on the copper and gold. This is just a photo of the style. This is the massive chalcopyrite veining that you come through. The other sample is more traditional fracture-filled porphyry copper gold system that you see. If we move up into the Pinnacle area, this is our sampling, and you get these structures coming through. It's more vein controlled, and these are photos of the sampling. It's kind of a breccia system that's coming up through the area. We think this is just a higher in the model. It just kind of fits higher up in the system. What we think is happening is the porphyry, it's tilted over, and so in the north you get higher up in the system, which is actually good, because if it's tilted, it just means instead of going down deep to get into your grade, you just go down south. And being tilted is quite common. The Mount Milligan and Chemists in the area, Lorraine deposit, if people are familiar with that, that's just 20 kilometers to the south of us, and they're all tilted to the north. Just although the Cathedral area is kind of being our principal focus, just because it's got the most work done, as well as got significant copper and gold, we have looked at other areas in the CGL area. What's different about this one is that it's a contact between the intrusive, which is on the left, and non-intrusive rocks on the right. And again, we get very significant high-grade copper values. You almost see the flow banding with their magnetite breccias coming through. Still getting into the fragmented, but there's more of this magnetite. So it's a different part of the system. Again, another one of the areas, Gale, we haven't spent a lot of time here. All the sampling you see is sampling that we've done over the past few years, but we didn't focus this year on this area. Again, our objective this year was to go in and find out areas that we could come in and diamond drill. And for that, we focused in on the Cathedral. But still, this is another potential deposit, again, with significant copper values. These are the values here. Again, significant gold values. One of the things that's nice about, I think, what we're going to find with this deposit as we move forward is so many projects I've been on, you have the tonnage, but you're always just trying to get that extra kicker of gold or silver or some element in there just to put it over that, over the cusp. And what we're finding here is we've got the grades, albeit there are rock samples, they're all from outcrop, but what we're finding is we have significant copper and we have significant gold. So it's our belief that as we go down and be able to drill this, we're going to start seeing significant copper and gold grades. So what we plan on doing this coming year, is again, this past year, our work was focused in on developing targets for drilling. And so next year we're going to go in and we're going to target our areas at the Cathedral area. We also did some work over at the Cirque, which is another area of mineralization just to the north. We've got potential drill holes there, as well as expanding, just again, the controls on mineralization. Because we've got such a large land package, we've got several areas identified, we still want to start developing, so we kind of line them up. We might have an area that's ready for drilling this year, and we're going to set things up so that other areas become ready for drilling next year and the year after. So that's these are just some photos just to show the terrain of where we're at in BC.
No, it's really.
Have any questions?
No, anybody any questions? I think it's an amazing project. It's really high grade, as you showed, and porphyries, they tend to be big, and everybody's looking for porphyries right now in the Golden Triangle, which isn't far off from your project. And you have mining projects also here next to you. Your stock, it was at $1 in April this year. You have 54 million shares outstanding. So right now your stock is at 10 cents. So fundamentally nothing really changed, right? I mean, you still have this property, management was changing. So I think 10 cents and you were $1 in April. Fundamentally nothing really changed. Can you tell us anything about that?
About the stock going down? I'm a geologist, so I'll leave the corporate side to Dave. I know we are changing the makeup of personnel. I'm coming on as a director and CEO of the company. So we're just building up our team, and Dave could elaborate on that, I guess.
Yeah, it's Dave McMillan here. This is in my past. I was involved with Bob Dickinson and Hunter Dickinson, and we were originally discovered the Mount Milligan deposit, and we were involved in the original companies in the Kemess project and then the Kemess mine. So familiar with the area. We got a little bit of a soft spot in the market on the price of the stock. It peaked at $1 and came down. A lot of profit taking. Basically, it went up too fast and came down just as fast. But we're reorganizing the sort of the management side of it. Came on as a interim CEO, but we're going to strengthen the management of the company. We're going to get our 2020 summer report exploration program. That report will be coming out soon. We're going to update all our marketing materials and the website and everything to reflect the latest. And we'll restart our marketing program in late January, but early February. And we're looking at other properties. One of the sort of the drawbacks on the Thane property is that at this point, in the early stages of the exploration, it's weather restricted, and what do we got there? Mountain goats, breeding period. So we can't get on there until the early summer. So we're looking at other properties in BC that could give us a year-round exploration, but our real focus is going to be on the Thane property. What else are we doing here?
Well, I can add just that we are fully permitted for drilling, and we have agreements in place with First Nation. So from our due diligence on, we're moving along. We're good on that side. It's just as Dave said, we are, if we start, the cathedral area is 5 kilometers away from road access, is where we used to move our gear in from. And it's a straight valley, straight down to it, easy valley down to it. I've already scoped out a road. So if we start hitting, significant mineralization, which we think we will, it's pretty easy to just punch in a road. And then once we punch in a road, I've worked on the Yellowhead project where it's drilling in the middle of winter is not a problem if you have road access. So it's easy to get road access into the cathedral area where we are right now.
All right. Thanks so much, Chris Nash and Dave McMillan. I'm really looking forward to your project development and that you took your time today. Follow IMC International Mining. The CSE symbol is IMCX. They have 54 million shares outstanding right now, trading at 10 cents, and have a market cap of 6 million. All right, next, our last but not least, it's Core Assets, and I believe we have Scott Rose with us here. He's a director of the company, and I'm going to show you a little bit.
Dave Hodge is here as well.
Oh, Nick is there as well. Great. He's
Nick had to leave, so.
Okay, so, well, good. We have you.
Yeah.
So yeah, I've been writing a couple of reports on Core Assets already. I believe 3 or 4, and I really like the project. Can you see my screen right now? Yeah.
Yeah.
Okay, great. Yeah. No, it's also in BC. They're looking for a big porphyry at the northern end of the Golden Triangle. They want to extend the Golden Triangle. And yeah, look at the rocks that they have found at surface. It's copper rich. They also have gold in it. So it really looks promising. So Scott, can you tell us a bit about the company, why you founded it, how you found this property, and what are your next steps to advance it?
Well, the company was basically found by Zimtu, and we created a company called Core around it so that we could start to explore it. Currently, it's located about 50 kilometers southwest of Atlin on the map there, northwest Golden Triangle. And we've applied for 18-hole exploration diamond drill program, and we're going to do a large radiometric and magnetic program to outline the alterations, zones, and geological structure on the property to better define the drill targets. And we'll begin exploration in the spring of 2021.
Okay, great. So you have the permits, drill program is...
We've applied for the permits, but they should be coming very shortly.
Okay. And are you planning any geophysics first?
Yeah, we're going to do the a large radiometric and magnetic survey probably in the beginning of the year.
All right.
We'll do that before we actually do any drilling.
If I could just make a comment or two, it's Dave Hodge, president of Zimtu Capital Corp. And one of the reasons I'm very excited about Core Assets is that it was 2-3 Christmases ago, a couple of prospectors walked into my office and started telling us about this gold copper opportunity in northern BC. And at that time, Nick Broadway was working for us full time. And so he was sitting in my office listening to this story. And I looked at Nick and said, I says, Nick, maybe we should just make them an offer. It was 2 weeks before Christmas, and I kind of sensed that they were looking for Christmas dinner. So Zimtu made them an offer that was in line with providing them with Christmas dinner, but certainly gave Zimtu a very strong position in the property. We did a little bit of exploration through Zimtu, which isn't our normal model, but the values on the property looked so exciting. We decided to do a little bit of the early exploration work ourselves. And based on that, we decided to form Core Assets. So, and that was largely done through Scott Rose's efforts. But the key is that the vast majority of the Core Asset shareholders are very, very friendly to Zimtu. So if we get any sort of results at all on these next couple of work programs, I think you could see a very sharp increase in the value of the stock, because most of the shareholders are my friends and they wouldn't dare sell.
And mine, and they're not selling.
So anyway, I think we're kind of excited about Core, and we're going to move it on from here.
Yeah, thanks so much. If anybody has any questions about the companies, we would now open up for questions. Core Assets, they only have 21 million shares outstanding, 7.5 cents, market cap 1.5 million, trading on the CSE with the symbol C.
CSE under CC. Yeah.
All right. We're almost 90 minutes in, 1.5 hours. So I think if there are not any more questions, we could wrap it up. What do you think, Colton?
Yeah, that sounds good. Thanks everybody for coming.
For coming, everyone.
If you do want to watch the presentation after the fact, we'll be posting it on YouTube and all of our social media as well. So you can find it afterwards, but otherwise, thank you so much. If you have any questions as well, feel free to email them in. You can find our email on our website, or it's just info@zimtu.com. Other than that though, if there's no further questions, thanks again for coming.